How to profit in a stock market sell-off? There are a number of ways to do it. You could sell the stock market short. You could buy puts, sell calls, even hedge in the futures market. But there's a simpler way, inverse ETFs. Let's take a look at the S&P 500 SPDR ETF. We bottomed out early this week at 660.87. This is a weekly chart. This structure goes back some 6 months, above which we remain stable, even bullish into later 26. From here, we can round up to new highs, onward and upward as we move into later 26. But if we close this week below 660.87, that is a classic sell signal that should, at least from my view, over the next 2 to 3 months, result in a collapse back into the 609, 613 area, which is nothing more than the December 24 into the February 25 high zone, a bottom picking zone for many technical traders. And this is an area where we actually could bottom out then into later 26. So a 2 to 3 month sell off below 660.87. How do you take advantage of that? Simply put, you can buy the SH, which is the inverse to the S&P 500 SPDR ETF. And so while we bottomed out at a 6-month channel bottom in the SPY, we topped out at a 6-month channel top in the SH. And if we close this week below 660.87 in the SPY, we are very likely to close above 37.40 in the SH, then anticipating a return to this low area from D's 24 into Feb 25, 40.83, roughly an 8% rally above 37.40. That is one effective and simple way to protect your portfolio and take advantage of a stock market sell-off. I'm Cary Artac with Wicked Stocks.